All right, let's go.
Ladies and gentlemen, welcome to the SoFi Weekly. Today, Roy the Wonder Boy could not join us, so we got ourselves a very special guest. Tim, how you doing?
I'm fine. How you guys doing?
Doing very well. If people are new to the show or potentially missed the last SoFi Weekly that we had Tim Sweeney on, this is Tim Sweeney. He breaks down most of the in-depth stuff that we need help on for, how the fair values on loans compare to CECL reserves and all of the fun banking stuff that we need a real. I don't want to call. Can I call you a lawyer?
Yeah. Well, I'm a lawyer and an accountant and other stuff, so you can.
Yeah. So
I'm actually a certain valuation expert. Yeah.
Tim.
Yep.
You follow SoFi pretty closely. What do you think about this week?
Well, I think it was a crazy week with the carry trade issue and back and forth, and then there's politics, and then there's also the potential for Iran striking Israel and stuff. There's a lot of the Fed. What part of that do you want to talk about? Most of the political issues, you just got to deal with them as they come. I kind of ignore them.
Yeah. Tevis, you just put out a video highlighting a couple different SoFi positives and concerns and different ideas. What are your thoughts on SoFi this week?
Look, they're releasing a lot more announcements for product innovations than they were in Q2. And I think it's going to be a leading indicator going into the Q3 earnings to see a real spike in terms of their business. It seems as though they backloaded a lot of the product innovation with regards to credit card. Now, the small business line, which we're going to talk about, all the way down to something as fairly insignificant as a non-permanent resident thing for SoFi Invest. It all seems really geared towards having this perfect harmony with the marketing and media side coming back online, with football season, basketball season all starting up in Q4 for them to really have some knockout quarters. So I'm starting to put the pieces together because I'm saying, okay, since Q2 earnings a couple of weeks ago, we've had like 4 or 5 different product announcements. We've had the 2 credit cards, we've had the subscription, we've had the small business stuff this week, and we've had the non-permanent residents. And it's only been 2 weeks. And meanwhile, we were starving for product announcements like a month ago. So it really seems as though management is like putting their foot back on the gas for a lot of new innovations coming up.
Yeah, no, I'm trying to find SoFi's thing on this app figures. Okay, found it. I think, by the way, they're updating the app pretty frequently. You had covered, I literally went to you specifically, Tevis, for the reason why they went to 3.0. I don't know if you followed this.
Yeah, I did.
Yeah, so I think we're at 3.3 already.
Yeah, so, I saw that too. I saw Ken posting about that. That was surprising. I didn't expect that to happen.
Well, I don't know who said it, but Tevis said it or somebody said it, that maybe after they've integrated Technisys and Galileo to their platform, it makes it a lot easier to ramp those changes up, right? Because that seems like what they're doing. But also, I think Noto's just getting a little bit of sick of analysts, and he's like, the end of his call where he said he doesn't, that no matter what I do, you're not going to give us any credit. I think he's just throwing down the gauntlet. I think he's going to be he's tired of playing defense now, and I think he's going to start playing offense pretty dramatically, especially because he thinks the macro is going to be with him.
Yeah, it's definitely a green light for him to push a little bit harder if the macro is going to potentially rate cuts or something. Hopefully, it's not something too dramatic where they're having to cut rates because they're on a significant back foot. That would also hurt SoFi as well. But
I don't think that's going to happen. I said in January I thought it was 2 or 3 rate cuts, and I thought September and November or September, December. I still think that's the case. I don't think they're going to go to 50 in September. If they do, I think it'll say we're going to watch the data. I think the data is kind of, you got to watch the data around presidential elections because the independent data gets skewed. People that they get data from their polling gets skewed, and so it's like you got to kind of look through the lines and look at multiple sets of data. And so one set of data coming up is maybe problematic. The next say it not. So I think they're going to wait. But I think he'll probably announce something. What next August 27th or whenever he's in Idaho or where their next meeting is. He's giving a speech at the end of this month. I think he'll probably say something to the fact that, like, we'll probably lower rates in September. I think he has to lower rates. I mean, he otherwise the regional banks are going to have a big problem. He needs to drop the rates.
So on that topic, I mean, while we're talking about the macro, regardless of whether it's 50 or 25 points in September, one of the things that's sort of been on my mind that I've been playing around with is how the different political outcomes might influence SoFi, over the next 6 months after that decision, because it seems as though the market was really pricing in a Republican, victory in the fall. And slowly from, what we're seeing in terms of polling, it's becoming a closer race. We know that Anthony Noto commented on this a couple weeks back before the Q2 earnings. Do we think that that's going to have any influence on how quickly rates are cut, or is it going to be fairly independent? And I'm just sort of wondering around that scenario specifically, because that might change the narrative around the macro. And we know this trades really closely with the macro.
Well, I don't think the Fed will do anything before the elections, and it actually what will happen will depend on what happens actually in the election. So if one party wins or the other party wins, and they start doing something that affects like the stock market significantly, they might lean into looser more Fed rate cuts, or they might have hold off a little bit depending on what it does. But you're coming into September, which is in October, which are traditionally not good months in the market. So that's just going to exacerbate it a little bit. I like to just go through September and October and kind of try to ignore them, because I think they're so out of line historically. They're negative generally. So
yeah, I'm not a big technical trader, but the sort of September October lulls is one that you kind of can't miss. Like that's where.
Although I think in 2021 or 2022, when SoFi had its big run, it was running in September, October, November. So you never know. But that was a little different market environment.
Hey, I mean, so far we've been trading opposite of the market. Maybe we'll trade opposite of the market then. We'll have to see. But yeah, so recently SoFi, actually during their earnings call, released 2 new credit cards, or are teasing 2 new credit cards that they're proposing. Tim, it had your name written all over it.
Yeah, I thought we could make a ton of money on these credit cards more than ever, and I was like going, I think I even sent a post. I go, is he just reading the one post that I sent about credit cards? No, but I'm sure they were working on it. It's a big thing. I think but I think what people are missing on the 2 credit cards is they're going to test these credit cards. You don't know what the terms were. They don't know what's the interest rates on these cards. What are the other benefits you have? Are they a MasterCard? Are they Visas? What other benefits are going to be assigned with them? And they'll do testing to see what works and what doesn't work. I mean, for like the Essentials card, they indicated like somewhere in there that you could turn your own auto pay. So maybe they have that as like a souped up debit card with auto pay, or try it. But I was going to like hold off on beating the credit card things again, but I decided that I'd beat it up a little bit more, because I'm really of the theory that the credit card, like a secured credit card for these people, as a starter card is the way to go, not only at even a 4% rate. And I put out an example that shows how much money people have to pay back over like a 10-year period with 28% versus 6%, and 4% is even lower. And the money they save on that, they're going to be putting in invest, or they're going to be putting into other things, or they're going to just be thankful to have that card where they can continue to use it. And 1 month they build up a balance and they pay 4%, which for most people on a credit card is going to be like, oh, all right, well that's not a big problem. If you charge somebody 28%, you have a lot more defaults than if you charge people 4%. So I think you got to stay tuned on that, because you don't know what the ultimate terms were. They only gave you a couple of the different terms, just a general idea of it. And people ask me, well, why would they give you all the terms? I go, well, if they're going to come up with something that's very unique, they're going to want to test it and then run with it. They're not going to like say it in advance, let everybody else use it and see what they're doing. That's why I was kind of reluctant to give all the ideas of the modeling of the card out, because I did say somebody else could use it. And I like SoFi because I like using their app and I like banks. And I've had the history when you're like, I grew up as a pretty poor kid, and when you're poor, banks don't treat you well. And so when you just graduate from college and you don't have any credit history, banks don't treat you well. When I graduated from law school, it was hard for me to get a bank account. The law firm got me my first bank account, because they said he's a lawyer and they vouched for me and I got a credit card. But, so I think the idea that Noto had about making this a one-stop shop for people and young professionals, and even just ordinary people, if you have that kind of secured credit card, you have no default. It teaches people to maintain a balance and use that balance, and then be able to go up one credit card to the next credit card in the ecosystem, advance in the ecosystem, and they're never going to get out of the ecosystem. I mean, like Tavis and I were talking earlier, like once you have like tax software, or you have like Quicken, like manage your bills, and it's more detailed, and you get that onto your system, these people then never leave the system. I think that's one of the problems with business banking is a lot of people with business banking don't know this because people don't have business accounts. But a lot of most small businesses use QuickBooks. So you have to integrate the business checking with QuickBooks. Nobody will transfer, some people will, but most people won't transfer over their business to business banking unless you have QuickBooks integration. I just don't know how hard that is to integrate. I know there's a software open source program, and most of the banks that do integrate, the top 8 banks integrate with Quicken. I just don't know how hard that is to get into the SoFi system, because I don't know if Galileo or Technisys, if it's compatible, or how much they have to do to make it compatible, because maybe they thought they would develop it themselves. So you got to kind of read between the lines of how long that would take, right?
Yeah.
So
I completely agree with you. If I know anything from SoFi, I mean, they'll tease that it's coming, and then we'll see it 2 years from now. So,
so just sticking on the credit card point, because I know we can pivot like fully onto the business side. Look, I think with credit cards, if you read the disclaimer in that blog post, they said, we're testing this to a small beta group who we are inviting to apply. Well, where do you think those users are coming from that beta group? They're coming from SoFi Money. They have the pool of people at SoFi Money. They have all of their spending and buying and saving patterns and investing patterns. They have all the data. They have every data point from Relay. So, I mean, to Tim's point, like they can be really targeted around who they want to test out with this card. And based on those results, they can adjust what the benefits of those cards would be, where that sweet spot is between, rewards given to users versus the sustainability of that card long term. And so I think that it's an interesting move. One of the things, I made a full video about credit cards, and one of the things that I mentioned was that where we see the distribution of products right now for SoFi's financial services is not in credit cards. Credit cards is one of their smallest segments, and yet that's where they're investing a lot of their time and effort. And I think that everyday card or the essential card, basically the one that is like getting your credit up to build good habits, good patterns, that not only aligns with their mission as a business to get your money right, but it also allows them to have a safe on-ramp onto lower FICO individuals, because the ecosystem benefits of this card alone allow them to, number one, make very data-driven decisions off of the SoFi Money pool of people as to, okay, who are some of the lower FICO ones in that pool that don't have a credit card exposure that we can then give our card to and allow them to cross-buy. And then if you see high defaults in that category, well, guess what? We'll target you for personal loans, and you can refinance downwards, and you can be a personal loan client. And they can just essentially eat away at their own cross-sell from credit cards to personal loans. And so I think that the ecosystem is really interesting there, because that's going to allow them to have a really easy on-ramp to cross-sell off of other financial services. If you have Relay, we're collecting data off you. We're going to target you for SoFi Money. If you have SoFi Money, then we're collecting data off you. We're going to target you for a credit card. If you have credit card, so on and so forth. So it's a smart move. I mean, obviously, it's an announcement. It's nothing that's out like right now. I don't think we have any other data points other than that blog post alone. But I mean, we'll see how it pans out.
Yeah, and I think that works into what Tanner was talking today in its frenzy about the whole ecosystem and having the subscription-based program for SoFi Plus for some people to get a little bit higher rates and stuff like that. That all that works together, and when it all works together, you get somebody where and you get all the data from Relay and they expand Relay. You get so much data on people's spending when they're doing bill pay and stuff just generically that you can target them for all kinds of other partnerships, right? And then you have 20 million members, and you find out that 8 million members need this, and then you go to somebody that's like Prime and say, we have 8 million members. We don't know how many of them are Prime. Give us a good deal. You can use that. That's like your subscription based. And everybody knows when you have something that's subscription based, what really matters is the number of members you have under subscription. And so that's part of the ecosystem. And I see with what Tanner was saying today, and what I was trying to advocate for a long time ago with this credit card, as that's kind of how you have to get the system, and it is use those credit cards as an entry point for all that. Because you can't use checking account for that, because you can just, people will get the information. You want all their banking with you. And so you have to have the credit cards there, and they're too profitable not to do right. You just got to figure out how to do them right.
So part of the thing that I showed off in that FinTech Frenzy as well was a quarter-over-quarter increase in defaults, once again, for credit cards, going from, I think it was 13.2 to 13.8% defaults. Is this the right time to be launching new credit cards? They're saying that they're figuring things out, and I don't know. The one thing that we don't get to see is they're not separating by cohort from our view, but from theirs, obviously they are. So I just wonder, is this the time to be launching credit cards if maybe they still haven't cracked the code on underwriting for these cards?
Well, you have to look at, when you look at the data that you gave, I'm pretty sure that most of those defaults come from that huge amount of credit under 600. So I don't know where that came from, right? Except for the fact that when they were first starting off giving savings and checking accounts, they gave everybody some kind of credit card, 1,000 or 2,000 or whatever it is, and that some of those went bad. And so having a new credit card where you're using new underwriting and you're not using the past underwriting, you're kind of stuck with the past underwriting of those people that already have those credit cards. I don't think it's a bad time or a good time. The fact that those defaults go up have nothing to do with your new underwriting for your new cards. And that's what you'll be testing. You'll be testing them to test better underwriting. And then you'll ramp up by applying those. For example, say you had all those, I forget what percentage of them was under 600. If you all gave them my idea of a secured card and they had some kind of secured card, you would have no more defaults there. Right. If you have no more defaults there, that's going to take that down to 2% default. And then if you have a whole ecosystem where some is secured directly by a vault, and then maybe at the higher end you're secured by invest indirectly, and then you have the one card like the current card, which is 2.2%, and you have better underwriting on that, and you don't have the low cohorts of FICO scores in there, you're not going to have 13%. You might have 3 or 4%. But then with the rest of the cards, you have 0%. So your average default rate is going to go way, way, way down. And your profit is going to go way up. So even if you make less interest on those cards, you're going to be way more profitable, because you'd rather have 1,000 customers making $1 than 10 customers making $10. And so I think that's where they have to go. They have to think 20 million, 30 million, 40 million members. And then you're looking at, you don't need to make $250 a credit card. You make $100 a credit card at 40 million members, right?
And on top of that, on top of the network effects that Tim is highlighting, I think that what we saw recently with a lot of their hiring, it's been in AI engineers. Presumably, a lot of those are going to be going into their underwriting models and assumptions and playing around to fine tune their models. But at the end of the day, just the flywheel alone, if you consider it, I don't know what the exact take rate is on the flywheel of the total amount of people that enter maybe Relay or SoFi Money, what percentage of those cross by. But even if credit card to start with is a slight loss leader, it's another product in that flywheel, and it amplifies the entire power of the flywheel in general. And so they can very easily do the math to make some base assumptions to say, okay, well, even if we're losing money on 10% of new credit card people, but 20% of them are actually buying a second SoFi product that we're making money off of. You know what I'm saying? They can do that counterbalance to say, okay, well, on aggregate, we're still making money off of these people, just not on the pure credit card alone to start with. And that's fine too.
Well, if you think about it, if somebody comes to get a credit card, and if you have it secured, you just sold 2 or 3 products. You now have a savings account, you now have a checking account, you now have a credit card account, and then if they want to get to a higher level card and build that up, you need an invest account. So you now sold 4 products, and then if you have a personal loan, you have 5 products. And so that's where the flywheel starts making a ton of money, is when you start bringing people in not on one product, but on 2 products or 3 products at the same time, which is kind of the idea of it, like when I had the secured card, is because you have to have at least 3 products. Right? You have to have checking, you have to have savings, then maybe you have to have some kind of direct deposit. And I think they've got an option where you just get $5,000 a month deposits instead of direct deposit, but they can play around with what that is and get more people in the system, because in the end, it's all about having good products and a lot of members. And when you have members coming in at one product, you go, okay, well, we sold 1 million products. If you have members coming at 5 products, you sold 5 million products. That's how you really ramp up your revenue. and it covers a lot of mistakes.
I'm surprised that the Essentials card is not a secured card, because that seems like the exact card.
You don't know that. You don't know that yet. You don't know that yet. All you know, you don't know what interest rates charged on that card. They said auto pay. Is it going to be secured? Is it not going to be secured? The idea. Somebody, one of the people that follows me was saying, "Well, so you're just like a souped-up debit card." I go, "Is it? No, it's a souped-up debit card, but it's not just a souped-up debit card like what Chime offers, because you can have a balance and learn to manage your balance. And giving them that balance at 4% interest, you still have the 4.6%. You don't have to pay them when it's in the vault. You have 4% they're paying. That's 8.6%. You have the turn on the credit card's usage when you give them 1% rewards, so they're getting nothing now, but you get 1.2 interchange on that. And they turn it 5 or 6 times. That gives you 5%. And then you don't have any defaults at 4.5%. So your comparative return on that is 18, 19%. And they're not making anywhere close to 18 and 19% before defaults on their current card.
Yeah.
And so that you could build that up rapidly. You just got to have the mechanism that allows you to go into that vault, and if you put money in it, it's connected to your credit card. So if you put money in the vault, your credit card limit goes up, and if you take some out, your credit card limit goes down. And so that's kind of the key fact. I don't know how they can do that, because it has to connect your credit card limits with that account, because that's how. One of the biggest problems that people have with SoFi is, how do I get a higher credit limit? Well, in that case, you might start out with $1,000, but if you put another $1,000 in, you now have $2,000 credit limit, right? And if you pay off more, you have $1,500. It shows people to manage their credit better than just a Chime card, which just takes the money out. So you get some interchange fee in the Chime card, and you build up your credit that way. But that's a false way of building up credit, because you're not managing your credit. And you're not teaching anybody to manage their credit. And people really have to be taught how to manage credit. Like I said before, members of my family never knew how to manage their credit. I taught some of them how to manage their credit, and they do way better when they learn how to manage their credit.
Sure.
And so that's what I'm talking about, where you guys are now talking about this ecosystem. If you spread this out and look at the ecosystem and how it potentially could develop into a subscription model to get something better, and that subscription model could pay a fee and also then get you a premier card that pays 3% or even more, depending on the assets you have. Because what Robinhood doesn't do the right way is they don't require you to put money in invest. They incentivize you to put money in their brokerage to make money to cover the cost of their card. But they have the reverse incentive, because their margin rate is so low and their credit card rate is so high that it doesn't really model out. But if they switch that around and require you to put more money in there, you have to have a certain factor of how much money multiplied times your credit limit that you would have to have in there to pay for those rewards. And so that's what they have to do eventually to get to a premier card. But I think the premier card, they're going to stay away from a while, because they're going to see how much it hurts Robinhood.
That's fair. That's a fair criticism. Just wait and see if 3% is even a viable option. I mean,
well, it doesn't look viable to me. I mean, you have $6 billion in cash, or how many of cash, they can keep spending their cash down to cover it. But it's almost like something's very good. It would be a great marketing plan. I think I said if they shut that off after a couple of months, that would be pretty good, because they get all those users, and then you develop a following for your gold card, and you get certain people in that, and you can just give it to them by looking at how much assets they have, and you don't have to require it. But I think ultimately, if you want a premier card that pays those kind of real rewards, it's almost like having a relationship with an investment bank, right? So if you have a relationship with an investment bank, say Goldman Sachs, and you have $200 million in there, and you want to borrow money, you're borrowing money at 1% or 2%. And because they're making their 0.5% fee on your $200 million, they're going to lend you money, 200,000 at 2%. And so you're never going to, so you don't have to sell your securities, because you don't want to, because you don't sell securities. Rich people don't sell their securities that have gains because they don't want to pay the tax. Because when they die, they get a step up in basis of all their assets and never pay any income tax. And that's how you get rich. You get rich never having to pay any income tax.
Yeah.
And so you can mimic that system by having a premier card that gives really great rewards. And even though it's going to have a loss, you're going to more than make it up by having them have 20x their credit limit and invest. And then you can say, if you're that SoFi Plus Gold member, you need to have for every $100 you got to put $5 in the ETF, because then they make money in the ETFs, or the S&P 500 ETF, or the crypto ETF. So they have to build out all those ETFs and that whole critical infrastructure and invest before they have a premium card, in my mind, because they have to make sure there's options where people can bring their money over there too, without having to pay them 1 or 2% like Robinhood does.
Right. Tavis, anything on this, or what do you want to shift to next?
Well, I don't know. I mean, I don't know how much we want to spend time on this, but I think it's a good segue for the business stuff. A lot of individuals are just contractors or have their own businesses and whatnot. I found it interesting that this week Anthony Noto posted about it. Maybe Tanner, you can bring the post up.
Yeah, just to clarify what you're talking about, because I don't know if everyone does know.
So basically, the post that Anthony Noto made was announcing SoFi's foray into small business loans and financing. They're doing this through partnerships. Anthony Noto's post highlighted something to the tune of 33 million small businesses across the U.S. If you just scroll up, a lot of those individuals now have options where they can bank with SoFi, or they can have a relationship with SoFi, except for the fact that, this is not going to be something that SoFi builds in-house. This is going to be something that they partner on. So for the business checking, they partnered with American Express and what does that say? Novo?
Novo.
And then for the financing, they had a list of partners listed in the next screenshot over there. So on aggregate, I think it's good, but it's just, a referral out, same as they have for insurance and a couple of other lines. I think they have car loans, something like that. Life insurance, they have cybersecurity insurance. They have a whole bunch of insurance products that they're all referred out. So essentially how it would work is, let's say I want to have financing for my small business. I would go onto the SoFi marketplace and I would apply, and then I would get redirected to a third-party partner website, and they would assess my application. They either decline me or they accept me on their side. This happens outside the SoFi ecosystem. And then if they accept me, SoFi gets a kickback. They get some money in the form of a referral. So they actually had that highlighted. If you go back to the screenshot, literally in the disclaimer, they say, this is happening outside the SoFi ecosystem. So positive for sure. But if you go to the previous one, so they're at the very bottom, they essentially highlight as much. I don't know if
SoFi's marketplace is owned and operated by SoFi Lending Corp. SoFi will be paid a fee from the provider if you obtain a financial product through the marketplace. All rates, terms, and conditions vary by provider.
Cut and dry, right? Yeah, pretty cut and dry there. So essentially, there's a couple of trade-offs here. If they had done this in-house, obviously way more effort involved, more heavy lifting, more cash that they would have to burn in the form of investment, at least to get this thing standing and then scale it up later on. But they would get to keep a higher portion of those rewards. Those people would be in that ecosystem. They could cross-sell them other SoFi products. There's a whole bunch of benefits of doing this in-house. By doing it the partnership route, they obviously have the benefit of moving very quickly because it doesn't really cost them a lot to approach Amex and say, hey, let's do a partnership and we get a referral bonus off the back of that marketplace. SoFi has a pool of high FICO individuals already on the money ecosystem, so they could refer those people out. And then you also leverage the established brands of a lot of these third parties. Like Amex is world renowned, right? So they can actually get a base going there. I think that this is just something similar to credit cards that they're going to be testing out to start with. It's a very low effort way to get initial feedback, information back, where they can essentially say, okay, of our referred third parties across the board, insurance, whatnot, along with small business, where are we seeing the biggest amount of money coming in the door, the biggest amount of referrals? How are those portfolios looking? How do those, profiles for the people look? And where do we want to make our next bet to vertically integrate or to bring this segment in-house? Is that going to be insurance? Is it going to be small business? We don't know. But essentially this way they can dip their toe in and they can see, what that landscape looks like before they make a measured bet to bring it in-house, because there's risk associated with that. There's a lot of costs there too.
Yeah, I think it's really the conversation around whether they want to be like last quarter, they talked a ton about diversifying into capital light business strategies. That's what this is.
Yep.
And so is that Anthony Noto kind of either in the meantime trying to pivot to more of a model that will see a premium in the stock, or are they just not ready and they're willing to use a partnership in order to get there? Like, there's a lot of companies that I really like that do this strategy, probably Shopify being at the top of the list, where every single service out the gate they want to give you access to. And then as they start to produce it in-house, then they switch it out, right? They used to offer loans, now there's Shopify Capital. They used to do shipping, now there's Shopify Shipping. Like, regardless of which product that you need, they've eventually replaced their own products with a Amazon Basics version, if that makes sense.
Well, Amazon, I think, is the best example, right? Because Amazon is the OG of doing this, right? They're a marketplace, and the marketplace functions as a connective tool between two, like the vendor and the purchaser, right? And then Amazon can collect all of that information as a marketplace, similar to how SoFi is doing it right now. And then based on that, they can make a decision of what they want to do in-house. And in the case of Amazon Basics, it's the top selling products across the line, and they can sell that onto their own marketplace. And so I think it's pretty smart because it also adds a very low risk way for them to make more money by just referring more. Like, I've said this before, and I even said it on this podcast tonight. The power of the ecosystem is dependent on how many products you have in that ecosystem. It's a network effect type of thing. If I have everything on SoFi, or I can basically have a connection to everything on SoFi, and there's a benefit there on aggregate, then yeah, I'm going to choose that ecosystem. And guess what? The switching costs for me to get off of that ecosystem are so much higher. And the lifetime value for me as a user is going to be so much longer as a result of it. And so them having more products, even though they're referring them out and getting money as a result, is still good because they're collecting the information, and it's a very low risk way to make more profitability, like profit wise, but also make a measured step of where they want to expand to next.
Yeah, I'll have to disagree a little bit. And here's why. I didn't read anything about how much information they were going to get through this partnership other than a referral fee. So I'm not sure that they're getting anything else. Number one. Number two, if you're going to set up a partnership like this, you want the partnership, the people you transfer that partnership to get better rewards or a better deal than they get by going just directly to American Express, for example. It has to be a better deal. Otherwise, you're just shifting them over there and letting them get an American Express credit card, because I'm sure that's what they're going to sell them. I have two businesses. I have business credit cards. A lot of my spend on credit cards goes through my business credit cards. If I was a bank, I wouldn't want to let that go. Now, would I let it go under certain terms? And we don't really know the terms of this partnership. All right. They said they're getting a referral fee. Are they getting the referral fee for transferring me over? Are they getting an ongoing referral fee for every other product that I buy through American Express? What's going to go on with that? Right. So there's a lot of things we don't know about it because it wasn't disclosed, just kind of like the credit cards. It's a good idea if you have an agreement that you get these people back. But for me, for my businesses that I have Bank of America, and just the other day I go another $29.95 charge from Bank of America. I want to go over, but I don't want to go over to American Express and then a year later go back. I want to go to SoFi because I want it to be connected with my SoFi individual accounts too. So when you have a small business, at least how I do it, and I have two small businesses, what I want is my small businesses to be integrated so I can actually go on the one site. And so say I want a SoFi app, I go personal there, then I go my business X, my business Y, I can see it all on my phone on the same site, and I can control everything. I don't want to go to there and then to go to Bank of America and then American Express, and it's co-branded with SoFi. I mean, we don't even know what it is, right? Is it just a referral fee? Because if it is just a referral fee and you're not getting any better deals, why would people? I could see people go, but what am I referring over? I'm not doing anything with SoFi in a business account. I'm just opening a business account. And so you go through their link to set up your business account, but then other people can go, oh, if that's such a good deal, I'll go to American Express. And then American Express is going to send you, like I get every day in my business from everybody, is how about an American Express business card? And then how about American Express business loan? And are they making money on every product they sell to the people that are transferred over? I don't know. But they should be.
On aggregate, Tim, do you think this is like, would you rather them not have introduced this at all as opposed to having introduced it in this way?
Well, if I'm sitting it from like advising the CEO, I'm gonna say, you know what, you got to tie this stuff down because you're sending people to a competitor. I mean, American Express, if you're going to start your credit card, American Express is your competitor. They run a damn good credit card system, right? They have good benefits in their credit card system. If you're going to do something where you're doing a real partnership with American Express, so it's like the SoFi American Express business account, that's different. That'd be a winner. It's just like when I say if you're trying to build up your tax software and your bill pay software, and you really make a deal with Quicken and TurboTax. Quicken and TurboTax are like, QuickBooks, they're like the top of the market for that. And so if you make a partnership where you use them within your system, you avoid not only the cost of the system, but the cost of all the updating. So the fee that you actually pay them, they can take a lesser fee because they're getting a lot of your clients that helps them pay for their updates, and you get a better deal than you can get by going to them directly. So you have to kind of mimic that. You would have to mimic that with your business accounts. And I don't know what the deal is. But if it's just getting the referral fee for transferring over and them open an account, I just don't see how does it help you. I mean, how does that help you at all? Because it's a core banking service. It's not like insurance. Insurance. I don't want to be in insurance and the regulation and all the work and all the paperwork. I'll just take a fee. That's benefiting your ecosystem, like you said. Somebody else like wills or trust. You send somebody there to take a fee. You don't have to get into that because you don't have the expertise to do it. Business accounts is a banking function. After credit cards, that's the next big thing to do. So I'm not sure that's. He's probably getting a lot of pressure to do it, and so people say, "Well, let's do it this way." But you got to give Anthony Noto a little bit more credit than for me just to speculate that they didn't have anything in that agreement to do that. And it's just a referral fee, because I'd be really disappointed if it was just a one-time referral fee, because you could have negotiated a much better deal than that.
I mean, look, if I was playing devil's advocate, and I'm not saying that they're doing this, but what we know is that they are referring everyday, not business people, normal W-2 people, they're referring them out if their FICO scores don't meet that requirement. And so they're actively saying no to people coming into their ecosystem. Now, it might be a little bit different with this entry. But hold on, it might be a little bit different with this entry credit card where they're going to lower some of that FICO requirement and open that addressable market a little bit more. But we know that they're being very, proactive about who they accept into their ecosystem if it aligns with their direction. If businesses is not really a direction that they actually want to go in, then this is all gravy for them because they're not going to be competing for that business market. Is that fair to say, or?
Yeah, that's a fair comment, except I just don't see how they want to say there'll be a major 10 financial institution without having any kind of business banking. That doesn't make a lot of sense to me. So this is I'll guarantee this is a temporary thing until they can get it started. The question is it a good idea to do it as a temporary thing? So if I'm negotiating that for them, I'm saying, okay, American Express, we want to send you this, and we want a referral fee, and then every time they buy a product, we want another referral fee, and we want to an easy way for them to transfer over to us when we have a service, and when you transfer them back to us, we're going to pay you a fee, because it's like paying American Express a fee to get the customer back. That's something they will agree to, because and you can agree to it because that's just like another customer acquisition cost. But you got to get those people back that you send over, and you really want somebody to be all my stuff's connected with American Express business banking, and it's through my Quicken, and I have all my invoices sent, and everything's connected. I'm never going to leave.
Yeah, it's definitely a very mature and Amex has definitely been on the more cutting edge side of technology. So like they're a very real competitor. I wonder how SoFi would compete on the fee side and everything, APY side, everything like that. That'd be interesting. But my thing is I don't think that I was never worried about the business loans, because every single loan product is temporary and you have to win over that business every time. A checking account you can have forever. So it makes it a little bit more of a permanent switch. It'd be very hard to win them back. I'm sure as they move, I don't have access to the app, so it's hard for me to know if Relay is also tracking the business side and if SoFi is tracking the activity that they have in external business accounts as well. So
I don't think they can do that. Well, they'd have to use what's Plaid to do that. And so they do use Plaid, so they could do that. But it's all what the points of the deal is. And they're never going to announce the entire deal, and American Express wouldn't want them to announce the entire deal. So I'm probably being overly negative on it because I don't know all the terms of it. But if Noto's listening, I hope you got better terms than that.
I think that they are.
You got to be able to get those back.
Wall of capital constraint.
Yeah.
And now I think it would be very hard for them to offer checking accounts without offering lending as well, and they can't turn everyone away.
That's right. Exactly.
So whenever it comes to them launching in an environment where rates are cutting, they're hoping for massive booms in home loans, student loans, personal loans are still going to, stay in with high originations. I don't know if they have the capacity to add another segment. Like that's going to be very hard for them.
Well, I think when they're ramping up credit cards at the same time, you're probably absolutely right. You can't. It's just if you build up. So for example, if you build up credit cards to where it's you have $1 billion or $2 billion of credit card debt, that's going to affect your ratios too, right? So I don't see a problem in doing it as long as it's negotiated right. If you can actually get those deals from American Express, because if it's like the SoFi American Express card and it's just a branded thing and you get referrals on everything that's done over there for 20 years, and that's not bad, because if they don't come back, you're still getting paid for 20 years. If you're just getting a referral fee and they're gone, and then they get American Express credit card and that all goes to American Express, and they get some loan from American Express, that all goes to American Express, then that's a problem.
Anthony Noto says, Tim, relax, I got this.
I'm sure he does. But I just can go by what I read and see. And like I said on my post when they got out, I go, this kind of confuses me a little bit.
Yeah, that's not actually him, by the way. But what's it called?
The fact of the matter is that they were never servicing these people anyway, so it was not even like their market to begin with. I mean, like, yes, it sucks because they're giving their competitors an on-ramp to steal away that customer for a market that could have potentially been theirs. But it's not like SoFi is actively like eating away at their own market that they had. They never had this product offering in the past.
Yeah, just let me reiterate something that's always been said. One-stop shop. All right. I'm a SoFi customer. I like SoFi. I use their app. I have 2 businesses. I want a one-stop shop. This is not a one-stop shop. But I understand what they're doing, because I think Tanner's right. You got to manage your ratios, and they're coming into a period where they're going to have a lot of personal lending. They're going to have a lot of refinancings. They're going to have a lot of mortgages. Hopefully they sell these. But even if you sell the mortgages, and even if you sell most of the personal loans, you're still going to have to retain some of them, and it's going to eat into your capital ratios, and you're going to make a lot of money. And credit cards are going to increase it. You're going to make a lot of money. And so doing the business launch has got to be delayed at least a year or two, and they get so much pressure on it, they probably wanted to give somebody an off ramp to be able to get it and help them out and help SoFi out. So I'm not like 100% against it. I just always want to negotiate better terms.
I think the thing that gets me the most confused is not that they're offering it. It's if it was going to be a referral in the first place, why offer this now? Why not 2 years ago? And if it's going to, like, we were expecting SMB loans this year. They were hiring people in SMB,
Right.
like tons of hires for these jobs. And then right whenever they could announce a product like this, they announce a referral to their competitors instead. And it just felt like, man, this is when you should be launching. Not like the referrals should have been years. If this is to sort of, this is a snack before dinner, this should have been a little bit ago. Like, you know?
Yeah, but I think they're, when you're building out, like, you want to be a major financial institution, look at all the stuff they have on their plate, right? So now they have the student loans, then they got Technisys, and they got Galileo, and they've got Wyndham, and they're trying to integrate all that. And then now they want to do credit cards because they finally figured out that credit cards is really going to be a ton of money. Credit cards is a lot more money, a lot faster than business accounts, and with a lot less internal allocation of employees once you get it going. And so if your choice is that or the business account, I know Steven, your guy with you, he says business, but I say credit cards, because if you do those right, you're making billions of dollars. You're making $1, $2, $3 a share over the next 5 to 10 years. Business accounts are kind of tough because you have to have the back end, you have to have the TurboTax and the Quicken connection. I mean, I went to American Express, their website, when I looked at it, and one of the first things I saw is, we integrate with Quicken and QuickBooks and TurboTax. And I'm like, oh, okay, well, I figured that. But that's the first thing you go to Bank of America, a business account. They come out, all right, here's our connection with ADP. You get a great deal on ADP payroll. Here's what you do in your QuickBooks. You get a deal on buying QuickBooks. Here's how you can integrate QuickBooks. Here's how you can integrate your tax returns. And then they get that. Then Bank of America, every time you do that, every time I run my payroll and I pay ADP the $85 a month to do my payroll, Bank of America gets a kickback from them. Right?
By the way, Tim, because you mentioned Steve's been on this business lending thing for longer than the both of Tanner and I combined. He's been on it for over a year, maybe over 2 years. And I asked him to come on the show and talk about it because the news finally came out. And he said, no, I'm boycotting SoFi because he was so pissed off with this decision and how they rolled this out. Similar to how you were, like, the same rationale. So yeah. I found that funny. But
yeah, I guess I push credit cards harder than he push business accounts because if they're doing that. But no, he's actually right. But what he's wrong about is in the time period it takes to get that started and going, and the resources it is versus other things in business. Like the credit card, it doesn't take a lot. Like if you take the secured card and you model it out and they test it out and it's secured, you can set up your checking and your savings and your credit card. The underwriting for the credit card is very minimal, right? Because it's secured. If you have a method where if your house is secured, you're behind a moat, you've got dragons on every side, and you don't have to really worry about somebody breaking into your door, right? Once they set up the credit cards, it's just you have a system where you just automatically, somebody comes, it's a checking account, savings account, secured vault, secured card. There's your card, right? You can do millions of those, right? Business accounts take a lot because there's a lot more paperwork in business accounts. You can do it online, but it's like, I was even looking at when I'm transferring that, and I said, okay, maybe if I transfer it to American Express, I go, oh my God, I got to get another corporate authorization to have another bank. Then I got to do this, and I got to do that. And I got to get all these California state records filed. I put it in. I'm going, it's not for $29. I don't want to do it. I would do it if it's part of my ecosystem because I like having like SoFi, my app. I go on my SoFi app. I go, I charge something. I'll just pay the credit card. I just bought some stock today. I transferred money to my son. I transferred money to my brother. I got these pay a friend. This means pay everybody in my family money. But I want that one-stop shop.
I think that you said an important part, that credit cards, because we already have one that people look past it because they want something to ramp profits. But honestly, the key to the castle is already in our arsenal, which is credit cards. I mean, you can maybe name one. I mean, I can't speak for you. I can maybe name 1, 2 multi-billion-dollar startups for business banking, right? Mercury, Brex. I don't know if I could name another one. I can name a ton of multi-billion-dollar credit card startups.
Oh yeah.
You know, there's a ton of money in credit cards.
Yeah, that's why I pushed it. I mean, you saw me. You guys see me. I do the meme with the guy beating the horse all the time. You know, it's like you gotta. It's just so much money there, right? And business, like for example, I'll just use my credit cards versus my business accounts. So what do they get out of me for my business account? So they get like, you know, because I have 2 business accounts and I'm basically charged like $500 or $600 a year. They get out of my business account, and then they get the ADP fees at whatever kickback they get on that. And every time they call me on everything else, I just hang up the phone. I don't need anything. So say that's $500, but I could charge $40,000 easy on my credit cards, on my business credit card, sometimes more, right? And so, you know, if you make 1% on that, you're even in that. Just with the credit card, you do less work, and so the profitability is a lot higher.
Mm-hmm.
Profitability is a lot higher.
Tevis, anything else on this story before we move on? No.
Recap.
Let's talk really quickly about July numbers. You had Tevis. I don't know where you got your.
Kyle, just check Kyle's Twitter. He posted about the web traffic.
Okay. I have my numbers as well. I just saw that you had covered it as well, so I wanted to know where the source was. Let me check his, however.
Tim, are you going to give Noto a piece of your mind on the business stuff? I love the long posts, man.
Yeah. No, because you know, like I like when I give my posts, I don't try to criticize as much as educate the other people or on X, which is the only reason I really went on it. I'm not to monetize or anything, just to educate people on stuff. And I try to do it in like, well, you know, like in the credit cards, I said, you know, just wait and see. This could be this, it could be that, it could be this. You know, they may not have a secured card. Maybe maybe they come up with a better idea than that. Maybe they have their essentials card is a substitute, and they got the underwriting right, and they can charge 17 or 18%. But you know, I keep posting this about these lower interest credit cards because you can use your whole ecosystem to get a better return on your credit card. So why do you, if you want to get your money right, why do you want to charge people 28%? I mean, why do you want to charge them 20% if you don't have to? Because then you have to deal with all the defaults, and then you have to deal with more sophisticated underwriting. It doesn't make a lot of sense, right? It's like, you know, do you want to paint your house like 5 different colors or 1 color, right? 1 color, paint your house and get it done. It looks professional. 5 colors, you got your trim a different color, you got your eaves a different color. Everything starts to build up, and then it doesn't look as good. So I don't think that I would do a long post on that. I just said, I did a post that said I was confused, and what I told you guys, I go, what are you getting on the other end? What are you getting to go? What am I getting by doing the referral that I can't get from American Express directly? So I did a little post on that. I'm sure you read it. But it's just that it was confusing to me because it's not. I don't know all the terms of the partnership, and so I say I don't know all the terms of the credit cards.
I think with stuff like this, nuance is important. Context is important because very easily we can have a slippery slope into being an echo chamber, especially on this podcast, because of the frequency of which we cover the news. And so having all the facts, or at least having competing perspectives on whether this is good or bad, just makes everybody, you know, have an even playing field to coming to their own conclusions.
Yeah, and what Dodo or SoFi gets by watching like your guys' podcast is he gets like user data too. Like, you know, they just got user data from me. What would I do to switch my business account? What do I want to get to switch my business account? You know, if I'm paying $1,000 a year on one business, another $1,000 on another one, that's $2,000. $2,000 a year from a business customer is a lot of money. Even if they could save me half of it, I'd go, and they still make $1,000, right? And so if you have, what do you say, 33 million businesses times $1,000? What's that? $33 billion. You're not gonna get all that, but there's a lot of money in this, right? There's a lot of money to give away for, what's your referral fee? And does your referral fee continue for other products they buy from American Express?
I want to drive you guys just a little bit more nuts before we move on to onto website traffic really quick. I showed this off today. This is Golden Pacific Bank, the company that SoFi acquired. You can see it right here. They're now a division of SoFi Bank. But up in the top here, we have personal accounts, and right beside business accounts. It's the first line. Business checkings, business debit card, business savings, business loans. We own this company. What's going on? Like, can we not just put a SoFi logo on this and send it off? This is why I think that it has more to do with capital constraints and everything like this, because we so clearly have the regulatory needs to offer business accounts if we own the company that's allowed to sell business accounts. So
I guess we could have everybody go to that branch and submit their documents.
Yeah, but I don't even mean that. I mean, is there really a new form to be signed for SoFi to call Golden Pacific Bank SoFi Bank and offer the business accounts that are there? I mean, they have the code, they have the compliance need, like their whole set of compliance for signing clients on Golden Pacific Bank would be the same forms that are needed to send forward for SoFi. So they regulate and operate in the same states. I don't understand why it would be any different. This is why I think it's a constraint or a capital constraint issue.
Well, I agree with you. I think it can be a capital constraint issue, especially if it ramps up really quickly. And if you're ramping up that quickly, ramping up your personal loans, you're going to be ramping up your mortgages, you're going to be ramping up your student loans. That's a scenario where you get into a capital restraints. That's why when they do the student loans and the mortgages, they're going to sell all of those. They have to. And they're going to have to sell a lot of the personal loans. There's just going to be too much. There's too much demand in a slowly lowering interest rate environment that they could get capital constraints, right? Because they're a huge percentage of the personal loan market, and you have people that will refinance. And I did a post on how they could refinance and avoid the fair value write-offs, but you're still gonna get a lot more loans. I mean, and if you did business banking at the same time, that would be a problem. So maybe that's what they're doing. I don't know what the capital structure about where the Golden Pacific Bank is within, is a parent company bank or is it in the subsidiary, but that may matter too from a regulatory perspective.
Margarine says, is it because Golden Pacific Bank doesn't offer margin on their accounts? It's very funny. He's saying margin and he's saying margarine instead of margin. Anyway. Okay. Now, this is the website traffic over the last little bit. In July, this darkened blue, purpley color, we got 16.58 million new views onto the desktop/mobile app. This is higher than the last high that we got in April of 16.35. What kind of quarter are we going to get? Are we going to get this, Q1 like quarter, very high across the board, or is it going to continue downward? Who knows? But any thoughts from you guys?
It's going to go up.
Yeah, I mean, it's trending upwards. Look at the multi-year.
It's going to go up because you're going to be in an actual declining rate environment. So people that look at SoFi and they're going to look for loans, and they're going to look for refinancing their mortgage, and then they're going to look for refinancing their student debt, then they're going to look for refinancing their personal loans. Then they're going to want to get a personal loan because credit cards are still high. And when the rates go down, the personal loan rates go down, the credit card rates stay high. There's more incentive to then get personal loans to pay off your credit card. So I don't see that dropping. I think the third quarter is going to be big. And I think the fourth quarter is going to be big too.
I mean, at the end of the day, like if you just simplify it to its most base component, the more products they have, the more that's going to go up. There's going to be, a larger pool of people looking for a higher amount of products. Can we, speaking of that, pivot to just very quickly a few minutes talking about the non-permanent resident thing?
Sure.
I think it's fairly insignificant, but I'm curious to get to both of your thoughts. So essentially, to tee this up, on Wednesday, SoFi announced that their Invest product was going to be available to non-permanent residents living in the US. So I presume to this point, you need to have some permanent residency to open an Invest account, but now they're opening it up so that, if you're living in the US and you're not a permanent resident, you can now open a SoFi Invest account. My whole take on it was that, like, SoFi has 9 million members. The US has 340 million people. If they just said, okay, what is the eligible pool of people for SoFi Invest? You take 340 million and then you say, okay, 18 to 55-year-olds or 60-year-olds, whatever. And then you say, FICO score XYZ, income XYZ. You still get a number that is many multiples higher than the total number that they have right now for their total members, let alone their total Invest members. And so I thought that it was fairly insignificant from a math perspective. I think that, like, the main benefit that I gave it was as a marketing and brand play. It's good because it amplifies that "get your money right" slogan. But other than that, I didn't really, put too much emphasis into it.
Well, here's from like a C-suite level of what you would do. It's a little bit more paperwork, right? Because they're non-residents and you got to file other reports and forms. But I would say you're sitting around discussing, you go, okay, well, how many people are there? Well, there may only be this, but if I'm ever going to expand outside the US, little brand building with people, have them some connection. It's a really good start for brand building if you're ever going to expand in the US. So you're going to sit there and say, it doesn't cost anything to do it. It helps us. We can do a little bit more paperwork and get more people. It's more members. It's potentially more products, and it's a little bit of brand building past your borders. Because when people come in visas and they go back, or they talk to people and say, so like in Canada, you say there's a lot of people like go to Palm Springs in Canada, maybe convenient to use SoFi. They use SoFi down here, and now they want to use SoFi Invest because they bought a condo down in the Palm Springs, and then they go back and they go, okay, well, yeah, I use SoFi because I can use it in the US when I'm down there. And now when they open in Canada, they've got like, oh, my mom uses SoFi and my uncle uses SoFi. I'm going to use SoFi. It's a little bit of brand building. As if you two aren't the biggest brand builders of SoFi in Canada.
Non-residents, yeah.
You're non-resident. You just need to come like that down to Palm Springs for a month a year, and then you live in the United States.
Yeah, one more reason to come down to Palm Springs.
Yeah. Well, there's a lot of Canadians in Palm Springs. I don't know if people know about that, but at one time, I think like 50 or 60% of the homes that were that people lived in just in the winter were Canadian residents, people from Canada. Yeah,
definitely true. I've heard I get people DMing me from time to time on products that they think I have any sort of control over that they want available on SoFi, and I've seen it once where someone was asking for brokerages for non-permanent residents. So
it's an easy thing to do.
There are people, but
it's an easy thing to do. It's like almost a no cost. It's a very little to no cost thing to do, and it looks like you're opening up. So it's I don't think it's a huge deal, but I think it's smart to do it.
Yeah, no, I think it's sorry, that Mike Hill comment is really funny. But I think it's good enough. It's fine. They're going to continue to roll out things now that I believe that they have integrated with Technisys or just Galileo's, core banking services. And we'll monitor whether that three. Sorry,
if you can do it, the incremental is fine. Every little increment adds up, right? When you're doing valuations and you're like cross-examining people valuations, if you want to be successful, you say, could your revenue projection vary by 1%? They go, yes. Could your expense ratio vary by 1%? Could your cap ratio vary by 1%, or your discount rate. And so they always have to say yes because it's true. And then in the end, you add up all the different percentages, and it's like 8% turns out to be a 50% reduction in value. So incremental gains of small percentage things that check something off their list that they don't have to do later if they can do it now. And with the integration of Technisys and Galileo, anything they can do for that integration also adds to Technisys and Galileo's toolbox for other people too, right?
Sure.
So you want to be able, this is one problem with their tech is when they were like trying to sell tech to somebody else and they didn't use the tech, that's a hard sell. Why don't you use it if it's so good? I mean, it's the first thing. And so now that they're using it, and they're going to use it, and they're going to exploit it, because you're sitting around the table and go, we need to exploit this to show people how successful we are exploiting this technology and software, and that lets you to sell that stuff faster.
Tevis, any final remarks?
Nothing to add on this specifically. There are some other minor news, this week for SoFi, but I don't think anything, worthy of a longer conversation. Maybe we want to continue on the after hours.
Sure. I'll give you this time though, this floor here. Give me 1 second. Let me pull you up full screen. So why don't you take the next 30 seconds to personally ask Noto to come on the show?
I mean, I've done it before.
Go ahead.
I don't think it's going to happen. I would love, So here's the thing. I was on the phone with Tanner earlier today around this. I cannot look at myself because I'm going to start laughing. I was on the phone with
videos
earlier today
every day,
and Tanner was talking about some interviews that he has coming up on his channel. So stay tuned for those. And I was saying, man, I wish we could get Noto on this channel because that would be great. I would love to chat with him. And I realized that in 2022, actually August 7th, 2022, so 2 years ago, I messaged IR along with Anthony Noto, and I said, hey, look, I would love to get you on the channel. I'd love to interview you. And they responded, and they said, thanks, but no thanks, in so many words. And then I messaged, like last week, I messaged Galileo, and I was like, look, I did an edit of an interview with Derek White, and that got 17,000 views. I would love to have Derek White. I'm a product person. I'd love to talk product. And they responded, and they said, thanks, but no thanks, but message Noto. And so what I did was I went back, and I messaged IR, and I messaged Noto again. And I said, look, I'd be willing to fly to San Francisco on my own dime, bring all the equipment, do an interview. You can pre-vet the questions. You can have full editorial, rights to cut anything you don't want. Let me know. They'll probably say thanks, but no thanks, but we'll see how it goes. But
wait, he just called me. He said thanks, but no thanks.
Yeah, exactly. They're like, if you're not Chris Hager, we don't even want to talk to you. So
no, but I think if you had some questions that either you or Tanner had some questions you wanted to ask, and you ask IR, I think they'd get you an answer. I mean, Hager's not getting an interview with Noto either. I mean, the problem with it's really a legal issue. But the problem with those guys doing interviews like that, it's like you shouldn't really, the lawyers vet everything you say. All right. The whole conference call is scripted. They have they know what the questions are going to be sometimes, and they know what the possible questions are going to be, and they prepare scripted answers that the lawyers review for every single thing. They just don't want to say something off the cuff, or you ask a question and their answer is somewhat confusing, or somebody misinterprets it and it's out there forever. It's just not something like, if I'm the general counsel, it's like, yeah, I'm not, thanks, but no thanks.
So here's the thing, Tim, is that they have done appearances with non-CNBC, non-Bloomberg, like they've done random podcasts for people before.
Right.
And so
Joseph
I
Lupton
think that,
had
what's
one.
that?
Jonah Lupton had an interview with Anthony Noto.
There you
Like
go.
The guy that we had on for Celsius?
We had Jonah Lupton on our channel. And so the point is like they've done this before. So my assumption is more of like, hey, it's a brand thing. Who do we want to associate with? But either way, I think that it would be good to have, simply because I'm more interested, especially now that they're introducing more product lines, talking about that ecosystem in general, talking about, what that moat is, because I think that it's going to be a differentiator for the business that many people won't see. Like, they just focus so heavily on the puzzle pieces that they can't zoom out to see what the image that's being formed is. And I think that could be really impactful, especially because, Tanner and myself, we've been covering this company. Like, I've been making videos about this company for like 4 years. And so we know this in and out better than most analysts on the street know it. And I think that would be a really interesting conversation from that product perspective in general, just to understand what that vision is and what that end state picture looks like. So yeah, that's
here's I think would be an idea for you, which could work. Is you don't say, I'm going to give you a bunch of questions about a bunch of different stuff. You ask them, how can I help you? Like if you're going to launch a product, how about come on the show and give us a little spiel about launching the product, and we'll just ask you some general questions that you want to emphasize, and start that way. Develop a relationship with them where it's easy, where he can get the lawyers to say, okay, we're just going to go do this as a similar pitch to what I'm going to give at Idaho or wherever, and he'll throw you a bone on that. But an open-ended general questions about everything, you'd have to be way more specific. That's just my advice.
Yeah, for me, I'd love to just start the conversation and then we can talk specifics. Tanner, I think, said something funny this week where he was talking about the Galileo and Vero, the whole thing. And he was saying, I think he even tweeted about it. He's like, oh, good to know I have a relationship with the CEO only when I spread misinformation. And I was like, I don't want that to be the case. I want it to be more of an open dialogue, because I think it can be. Chris,
I was surprised he did that, but I'm not saying there's a 0% chance. I'm saying you're like, it's like, so you're saying there's a chance.
Yeah. Noto stays just close enough where, he makes me continue to ask, but
no, but I'm sure that he appreciates the hard work you guys do.
I think that's true.
That's why I started watching you guys, just because it saves me a ton of time in doing stuff. And so when you have people that are on X explaining stuff, that's what he sent me a message once. He goes, thanks for explaining this stuff, because he can't really explain it the way I can explain it. He can't call people out for being idiots and not knowing what they're doing. He can't. He's got to be kind of middle of the road. He's got to be, and trust me, if he reads this stuff, he wants to say some stuff to people, because it's like a lot of BS, right? And but it goes, everybody has their opinion and everybody has what they're doing, but some people on X get a little bit carried away.
Yeah. Good place to wrap.
Yeah. And I'll just say as the last thing, my email is sitting in your inbox, Anthony Noto. Respond.
Or we're going to send Chris Hager after you, and then you're going to have to respond.
Yeah.
Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. If you liked it, hit the subscribe button down below, hit the like button, do all the fancy stuff that helps us in the algorithm. But until next time, bye for now.